Well, hello, everybody. Welcome to our exciting webinar tonight. We're so excited. We got a lot of people hopping on right now. Thank you, everybody, for joining us. For those of you that don't know me, my name is Kevin Clayson, and we're really excited to be here with you guys tonight. And we're hopeful that you're going to be excited that you're here, too. We got some really cool things to share with you, and we're really excited to be able to make some awesome announcements, give you a little bit of an update of kind of what's going on with the market, what we're seeing happening in real estate right now. And we're just excited to be with you guys. So thank you, everybody, for jumping on. We have people joining us literally. I mean, we've got masses of people jumping on right now, which is awesome. And joining us, I'm recognizing the names from all over the country. So that's always fun. It's good to be with you. If you're just jumping on, my name is Kevin Clayson, and I'm one of the co-founders of Done For You Real Estate. This webinar is being recorded, just so that you guys know that, full disclosure. And we hopefully will be able to get you a copy of this shortly after we conclude tonight so that you can go back and review if you want to. And Alan said a very kind thing to me. Well, thank you, Alan. I'm thankful for you guys. And so tonight we're going to go over some really neat things. I'm going to go ahead and start showing you our slides, and the slides are going to keep us on track tonight. Now, we're not intending to be longer than about a half hour tonight, but if you've ever heard me speak, you know I have a tendency to be quite long-winded, although I'm not the only speaker. So hopefully we'll be able to get you guys in and out and give you all kinds of awesome information that will be really beneficial to you. So I'm going to go ahead and share my screen so that you guys can, I want you to be able to see my slides. Okay, all right, I'm gonna hit play. All right, there we go. So, welcome to our webinar. Now, we've got some really exciting announcements that we're going to share with you tonight. But before we get to the announcements, I wanted to give you a little bit of an idea of what the agenda is going to be and what you can expect over the next 30 or so minutes. And so we're titling this webinar, What's the State of Real Estate Investing and What Does It Mean to You? Look, we know that the whole world is in flux right now. It's crazy. Everything feels like it's upside down. And we wanted you guys to know what we're seeing on the ground, what's happening, and then share with you what that means for Done For You Real Estate, and more importantly, for you, for Done For You Real Estate clients and for your real estate portfolios, because there are some really awesome opportunities that it looks like the market is giving us. And so we're going to talk a little bit about that. So here's kind of what the agenda is going to be like tonight. I'm going to start, just take around 10 minutes and hopefully shorter than that, give you a few updates that I hope you'll enjoy, as well as kind of fact checking the economy. You know, there's a lot of things that were said as COVID-19 rolled out, and there were a lot of things that the media and that pundits and that real estate experts, I'm using air quotes if you can see that, we're anticipating, right? A lot of publications. And I want to share with you what we've actually seen, how the Done For You real estate product has been performing for our clients. And many of you know, because by the way, if you're joining us tonight, it's because you've been someone who has transacted recently. We've been able to do a property and market review and analysis for you recently. And so we felt like this information was going to be really pertinent to you and where you're at in your portfolio. So just so you know, you were hand selected to be able to join tonight. Hope that you got the postcard as well. We thought that would be a neat way just to send you something and be in touch with you. So I'm going to begin tonight. Then we're going to turn it over to Mike Chamberlain, who's going to talk a little bit about what is the state of real estate investing right now. And then Steve Earle's going to come on and he's going to talk about what we're seeing in the markets, and then share a really awesome and exciting announcement about what we're looking to into the future. So let me go ahead and just get things started and give you a few updates on what's going on. We consider you all part of the Done For You real estate family. You are our family. When we talk about you here in these offices, you are not just random people. You are our family. We think about you all the time. We know you by face and by name. We care for you, and we want to help you achieve your income replacement goals. And I just hope that you know that. Everything we do it for you, understanding that if we can serve you well, we can succeed as a company and open up opportunities to serve even more people. And so let me get you up to speed with what's happening on this side of the screen, on what's going on the DFY side of things. For those of you, you probably haven't been to our new office because, it's 2020 and there's a global pandemic and nobody can go anywhere. But so I thought I'd show you a couple pictures. We moved into this new office just in January. Our address, if you want it, is 920 East, 800 North. We're Suite 203 on the second floor of this building down here on the left of your screen. We're on the second floor and kind of as you're looking at the building, on the left side of that building. And this is our lobby right when you walk in, and prominently displayed in this picture is a big thing of hand sanitizer. If you do come visit us, we have masks, we've got gloves if you want them, and we've got sanitizer everywhere, plus plenty of drinks. And so anyway, if you haven't stopped by the office, we should, as soon as the vaccine comes out or as things start to slow down, we are anticipating doing an open house party. And so we want you to come and see the office, and we want to be with you, and we want to see your smiling faces, even if we just see your eyes smiling because the rest of your face is covered with a mask. But we miss you, and we want to be with you. But this is the new office. We've loved it. We haven't had very many people working in the office for the last few months. It's been just a handful of us. But nonetheless, these offices have served us really well. We are right by Harmon's in Orem, Utah, for those of you that are in Utah County or in Utah. And it's a brand new building near the mouth of the canyon, going up Provo Canyon. And we're really, really happy with the space. It's been great. It's got awesome energy. It's just an excitement. There's a lot of good things happening here. The other thing that I kind of wanted to let everybody know that to me is pretty exciting is that we have had some really amazing relationships that have been solidified. And we have had, over the last year, we've had a number of referrers like Kelly Fasterling and Teresa Martin, who are pictured here on the screen, that have been referring a tremendous amount of business to us, almost where it's become kind of a profession for them or part of their professional life. And it's been really great. We are so excited to have more and more folks referring business to us. We've created some really incredible affiliate relationships with companies like 101 Financial. If you don't know who they are, check them out. Cash Flow Tactics, which is a company founded by a DFY client that has gone on to do some really incredible financial planning things for people, with real estate being a part of it. And we've been working to a really tremendous degree with our sort of professional referrers and our affiliates. And the other thing that's really exciting that maybe some of you have heard or know, maybe you don't, is that we now sponsor a national radio show. We sponsor the Buck Sexton Show. He's on about 200 stations. He's going to be coming to 105.7 here in Utah, for those of you that are around here. And that's Steve Earle and I. We went out and met with Buck in New York, where he records at the iHeart Studios in Manhattan. And Buck is kind of an up-and-coming conservative talk show. He's got one of the fastest growing conservative podcasts in the nation. He just got his own primetime television show. He's he recently appears on Fox News and with Tucker Carlson. So he's on the conservative side of things. So regardless of your political persuasion, we thought it was pretty neat. We've really solidified this relationship with Buck. He just bought his first property. It's gone really, really well. He's going to be coming on our podcast, which we'll talk about here in a little while. And his brothers, his family, they are also starting to do real estate with Done For You Real Estate as well. So it's been a really neat relationship that we're really excited. You ought to check out his podcast. It's called The Buck Sexton Show, or his radio show. He's really a great guy. And he's also part of this DFY family now, not just because we sponsor a show and he kind of endorses us because of his experience, but because he's a client. So anyway, just kind of neat things that we're seeing happen. Thank you to all of you. These are just a few of the people that have been referring business. Thank you. There are so many of you that refer your friends and family to Done For You Real Estate. It means more than we can ever say, because it means that there's something here that you thought was valuable. So thank you for that. I won't say much about it now, but we have completely revamped the referral program. It is more lucrative and easier than ever before. And we're really excited. We're going to do another webinar just about the referral program, just to give everybody the information. Tonight, we wanted to keep it very market-centric and tell you kind of what's going on and let you know what's coming. But we will be doing another webinar. I'll talk about this here in a moment. We're starting a monthly webinar series. And so the next one, we will talk at length about the referral program. Just a very simple referral program, nothing crazy, nothing fancy, not levels and, pyramids, or it's just real simple. It's like if we were a dentist and you referred somebody to us to get their teeth cleaned, right? Really simple, but really cool and really lucrative. So we'll talk more about that later. The other thing that I kind of wanted to let everybody know is we have this great website that's been a huge resource, and I hope that you go and visit DFY-Real Estate regularly, or visit the blog where we post regularly. But we have an updated website rollout that we are anticipating for early October. There are going to be more tools than we've ever had, additional information than we've had in the past, as well as we are launching a client experience portal. So the client experience portal will be a login site where you'll go to dfy-realestate.com. You'll be able to hit login, and you'll be able to kind of track through a transaction. And there's going to be a lot of supplementary information on the client experience portal that is not for general public consumption. It's going to be for people doing real estate, transacting real estate, and like you who've done it and are looking to do your next property. It's going to be information that we know is important and germane to you, as opposed to, being just marketing information. This is real brass tacks, meat and potatoes type stuff that you need as you continue to grow your portfolio. So that's going to be really cool. We're going to be throwing some calculators and tools on the site, unlike anything we've had in the past, that we hope will be very beneficial. We're trying to get more and more sophisticated, create more and more resources that are beneficial to you. And the new website rollout should do just that. The last kind of thing that I wanted to mention is, if you haven't been listening to our podcast called Replace Your Income, you should. So this podcast we launched it, I think it was in June, and it's been awesome. We've got all these 5-star reviews. If you have not gone on to Apple Podcasts and given us a 5-star review yet, that would be so much appreciated if you would go and do that. It really helps Apple know that we've got content that's worthwhile. And I think we're up to 16 or 17 episodes with phenomenal content coming every single week. And so the episodes typically come out Monday morning, and they're probably released while you're asleep. And then when you wake up, it would be there for download on your phone. But we're on Spotify, and we are on Apple Podcasts and Google Podcasts, and just we're all over the place. And so go check it out. Steve and I are the ones who host it. Our little microphone setup's right here behind me. And we really try to just do episodes that will be beneficial for anyone listening, not just DFY clients, just general real estate enthusiasts, but also DFY clients. But it's been really fun to do this podcast, and we have got such unbelievable feedback. So a huge thank you to those of you that are listening. We are seeing our download numbers increase every single week, actually. Every week they jump, and that's really neat. And so thank you for your support if you've been watching or if you've been listening. And if not, please consider checking it out. I hope it will be well worth your time. And if you could just tell one friend about it, that helps us a lot too. Tell one friend to go listen to it. And if it's no good, they'll maybe never listen again. But I think they might find some benefit there, especially if you know someone that you've wanted to introduce the company to, or you've wanted to introduce real estate to, and you haven't known how. The podcast should be hopefully a really good resource available to you. So with that being said, I wanted to just kind of talk a little bit about what we are seeing based on the model that we deployed over a decade ago and the model that we've stuck to And I kind of wanted to say, okay, look, let's fact check the economy. When it comes to single family residential real estate done in the right markets, in the way that we try to attempt to do it, where we're just very conservatively hitting real estate singles and doing it with some consistency, what we found is over the last 13 years and over more than 4,000 transactions now, both through the Great Recession and now a global pandemic, this idea of single family residences just outside of major metropolitan areas that are like 2-bed, 3-bed, 2-bath, 4-bed, up to 3-bath. These are the types of homes that are flying off the shelf. And Steve's going to talk, Steve and Mike will both talk a little bit more to this, but you guys, the reality is I don't know if we've ever seen outside of during the Great Recession, when there was opportunity available to purchase, I don't know if we're going to see another opportunity in our lifetime like the ones that are going on right now. We're feeling a tremendous sense of urgency to acquire as much as possible. And we wanted to pass a little bit of that on to you because we don't want you to miss out on potentially really great opportunities. Look, all of you watching, you have real estate, which is awesome. We want you to know what it's looking like and where it looks like it's headed. And in the event that you're thinking about acquiring more, we want to paint the picture so that you know that now might be possibly the best time in your life outside of when the Great Recession happened, which was unexpected. There's just a whole convergence of things taking place right now that are really amazing that Mike and Steve will talk a little bit too. But these homes that are at or barely below the median are flying off the shelf. And if you know kind of where we do real estate, it's always good job markets. It's where homes, the types of homes we do are in incredibly high demand. And these are higher quality blue chip type real estate. So for those of you that have been with us for a long time, what you've probably seen is that the price of homes has been steadily increasing. And we're finding that better real estate performs better over the long run. There's a lot of real estate companies out there that, I don't know, float the idea of $80,000 or $100,000 pieces of property. They are in D and C type neighborhoods. And the done for you product is always like a B plus, maybe bordering A minus type neighborhood, but not high end AA plus, really expensive, really large. It's always these, middle of the road, middle income, middle America, strong job market, median type of income earners, hardworking Americans that make a good wage, but they're not necessarily, super uber rich and wealthy. Those neighborhoods are where real estate has stayed in high demand and stayed really hot and given really, really good opportunities. And so you've seen that the quality of real estate has slowly been increasing to make sure that we're not going after properties that are going to have a lot of problems and that are going to cause, a lot of tenant issues. Now, we know real estate isn't perfect. No matter how good the home is, things can go wrong. We know that. Many of you have experienced that. But we try to scale on the side of better quality blue chip type real estate. And we've seen that now, sticking with that model, we have not seen the same type of negative impact in the real estate and in our clients' real estate portfolios. And I hope you haven't seen that impact either during this global pandemic. We have found that working, hitting real estate singles has always worked, but it's working now better than ever. There is more and more information that is coming out that is saying this type of real estate, single family residences at or below the median, good neighborhoods, strong middle income, middle class neighborhoods with good job markets, good economies, with not extremely high purchase prices, but just kind of mid-range. This is where people are buying real estate and wanting to hang on to it, and where demand, you'll find out a little bit later, demand has increased dramatically for this type of home, which of course, Mike will talk a little bit about supply and demand and the impact that has. I don't want to steal his thunder, but just to kind of put this in context for you, we were hearing all over the media that there was going to be massive foreclosure. We have not seen that. We were hearing that it was going to be a really bad time to buy. In fact, we've seen quite the opposite with interest rates doing what they've done with overall demand for real estate. It's been insane. But we also heard that all of these people weren't going to be able to pay their rent. Now, no doubt there have been folks affected by job loss or by being furloughed or by being laid off or whatever the case may be. But I just put this on the screen. it was only 1 in 10 that were having payment issues during the height of the pandemic in single family residences, as opposed to the 1 in 3 that you were hearing about in the media. And so a lot of the numbers that were being pulled from publications or from, prognosticators saying, oh, it's going to be really bad and the rents are going to be really bad. And they were looking at apartments. They were looking at lower end housing. They were looking at it as a snapshot of the whole economy, as opposed to just taking a look and what is single family residences doing. And if we boil that down even further and we go single family residences inside of these types of neighborhoods with the kind of real estate that we're doing and doing consistently, how is that performing? What are those renters doing? What are those rent collection records looking like? Now, what we found is in single family residences, in reality, and I would say that there's, Steve will talk to this, but our property managers in our markets maybe even saw better results than even what the more conservative side of the national averages were with this 1 in 10. So point is, this type of real estate, hitting real estate singles, simple and conservative, single family residential real estate done in the right markets, with the right set of conditions, with the right types of economies, at the right purchase prices, with the right type of real estate in the right types of neighborhoods, which attract the right kind of tenant, has proven now over more than a decade, through a global pandemic, through a recession, to be extremely consistent. I hope that's something you've seen in your real estate. I hope you've seen the growth, but we wanted you to know that we are more jazzed and pumped and passionate about this kind of real estate than ever before, because doggone it, it has worked and worked and worked. So anyway, we're just excited. We wanted you to know that's what we're seeing on the ground. Now, what I want to do is I'm going to transition over to Mike Chamberlain. If you don't know Mike, you all know Mike. If you're on this webinar, you know Mike. Mike is awesome. And I think we'd all agree he's one of the kindest, smartest, wisest individuals I know I've ever met. He's the kind of guy who my wife and I, we just moved. And Mike showed up, with an empty van with all the seats taken out and a dolly and who knows, a case of water for anybody else that showed up. And he's just that guy. And the man just carrying pianos on his back. I mean, he's a man who's dedicated to people and dedicated to serving others. And we are so fortunate to have him be a part of the team. And Mike's going to talk a little bit about what is the state of real estate investing right now, so that you guys can kind of see there's some really cool economic factors taking place right now and some things that are really awesome. And if you know Mike, he's got a really heavy background in financial advising and is very plugged in to, he's kind of my go-to guy when I've got questions about what's happening in the market. He's just really plugged in. And so, Mike, I'm going to kick it over to you, my friend, and let you kind of take it over and talk a little bit about what is the state of real estate investing. Oh, wait, before I do that, I forgot to tell you, guys, we are going to start a monthly webinar series. This is the first one. The next webinar is going to be October 8th, 7 p.m. Mountain Time. And Mike's going to be joining us again and talking a little bit about how, even as a financial advisor, where a lot of people don't like real estate, what is it with his financial advising background that he's seen? Information that we have not shared before, information with a fresh perspective, because it's not coming from Steve or I, who you've heard from a bunch, but Mike has an unbelievable take and a whole mound of data after doing all of these property reviews with hundreds and hundreds of clients. And it is absolutely phenomenal what he's going to be sharing. We're also going to be talking a little bit about the referral program and just unlocking those details. So at the end of the webinar tonight, I'm going to give you a resource page where you can go and register for that webinar. We'll keep them brief. We're going to do them every month, and we're going to archive them. But you're going to want to show up live, because every time we do it live, we're going to have something special to kind of give away to the live audience, which I think will be really awesome. So the next one will be October 8th at 7 p.m. So put that on your calendars. Again, we won't go long with these. We want to keep them short and to the point, and it's just packed with good information. So with that, I'm going to, hush my yapper here, and I'm going to turn it over to you, Mike, to talk a little bit about what is the state of real estate investing right now. So over to you, my friend.
Okay, great. So thrilled to be with everybody. I've gotten a chance to talk with a lot of you, not all of you. I look forward to talking with more of you. So it's an open invite, actually, to to get access to a calendar, schedule some time. I'd love to get to know more people. A big part of what I've been doing with the company, I've been with them for the last 2 years. And Kevin, I don't know if everybody's seeing the slides now. I'm just seeing the close-up of you. I don't know if we lost the desktop. Do you want me to go to my desktop?
I wanted to stop sharing so that everybody saw you really quick. Are you still just seeing me, or what are you seeing?
Yeah, I'm seeing you and not your desktop there.
Okay, good. Well, as soon as you kind of jump into the slides, I'll kick them back on, and then we'll just show the slides. But I just thought we could just talk and let people see you for now.
Okay, sounds good. Thanks. So that next webinar, we're simply going to give a perspective. I've loved getting the chance to meet and talk with several of you over the last couple of years doing these annual reviews, these property and market reports. I'm thrilled when people have great experiences, and I cringe on the occasion when people are frustrated with some of the messiness that real estate is inevitably part of real estate. And so we're going to give you a perspective. As Kevin mentioned, I spent most of the last 15 years as a wealth advisor, a financial planner. So giving you a little different perspective on how real estate's doing compared to what else your money might be doing. And I'm a big fan of being diversified, and I like having money in all places, but I think it'll be helpful for your overall experience. So do join us for that if you're able to. It's 2 years ago when I joined the company. The world's a very different place than it was then. Of course, it's a very different place than it was just 8 months ago. Of course, since COVID came on the scene, COVID has changed things. And I was one that didn't really think that it was going to have as big of an effect as it has had on us. You know, I was one that kind of thought of it as a new now instead of necessarily a new normal. And that changed for me when I got COVID myself and infected a few of my family members. And then when my 83-year-old mother was in the hospital for nearly a month, and with most of that time not able to be visited by her family, you know, we went and we waved at her from her 8th floor outside the hospital windows because we couldn't be there with her because of COVID and the regulations, and in a time when we thought she was going to pass, and that had a dramatic effect in reality-inducing experience for me and how COVID has changed things. So I don't really think of it as a new now anymore. I think we are in a new normal. And we certainly are in a new normal when it comes to what it's doing for real estate and the type of real estate that we help people do. The real estate that Done For You has been doing for 13 years, I'm just 2 years of that, but they've been doing it for 13 years where they focused on, as Kevin mentioned, single family homes outside of cities where people can have space to live and breathe and experience that is in a higher demand than it ever has been before. You know, companies have realized that there was a big question mark before how effective would employees be if they weren't at the office and they didn't have somebody looking over their shoulder. And they've realized now that they can be very effective and that they can be happier employees. They can save that 2-hour round trip commute, or they can be more focused while they're on the job. They're actually being more effective than they were in the office. And it's changing the way that companies are doing business. You have Dorsey, the CEO of Twitter, saying that his employees will never have to come back into the office unless they want to. You have Pinterest that just 2 weeks ago canceled a contract that they had for 490,000 square feet of office space in downtown San Francisco. They broke that contract and paid $89 million to break the lease because they realized that this remote working had changed where their future employees would be. They could be more geographically diverse. They could cater to the remote living. And it's changed how business is being done. And several companies have had more profitable quarter in the second quarter in the heart of COVID than they had at any other time. And so companies are realizing they can save money by not having the office spaces. They can cut back on transportation costs. We went out to lunch with somebody last week that works for a large Fortune 1000 company. He has tens of thousands of dollars a year in travel expense that his company would usually pay for him to go and fly around and be with people face to face. He does all that on Zoom now. And so the company's saving tens of thousands that way on just this one employee. And so it's changing how companies are doing business, and it's changing where their employees will want and can live. So often people would live in a city, of course, because it's closer to work. It's closer to the culture and the nightlife and the activities and events that are so attractive to so many people. But now in this new normal, this new world, you know, that's going to come back. I'm fully confident that it is, but maybe not to the degree that it ever has been before. And now that people are working from home, they want an office at home so they have less distractions and they can have their own space to focus on work. and they want clean air to breathe, where they're not sharing an elevator with their neighbors, and they're not sharing the same HVAC system. And they want some of the things that, of course, single family homes out in the suburbs have been producing. And so we're seeing a huge, what a recent article in the New York Times said, a surge unlike any in recent memory for homes in the suburbs. We're seeing that surge happen now, and we're experiencing it as we're helping people find these single family homes out in the suburbs. There's in that same New York Times article, there was a reference to a 3-bedroom, sound familiar? That's our bread and butter, 3-bedroom home that was about 25 miles outside of New York City. That in 3 days' time, they had 97 people review it, and they had 24 offers in 3 days' time for this 3-bedroom home outside the city. Other offers that were made over Facebook posting, people sight unseen, never been in a home, multiple offers. That example back in New Jersey, they actually sold it for 21% above asking price once it went under contract. And we're experiencing some of that as well. There's still inventory where we're at, but it is very much an active market right now where our investors need to be quick and ready to jump on a good investment when the numbers make sense. And so that's definitely a different world that we're in, where people can live at home, they can commute when needed, but be able to have more space and more clean air. So that drive is absolutely affecting the supply and demand, of course. And the old basic laws of supply and demand, when you have something that there's less of and there's more demand, that is going to affect the prices over time. And we'll never tell you that that's going to guarantee that your price is always going to go up. It's not. One of my things I like to always emphasize when I'm talking with people is you should even expect prices to go down on occasion. We don't foresee it. We don't see it happen anytime soon, but it's normal when you have an ownership investment like this. Prices will go up and down in the short run, but in the long run, they've always gone up. And so right now, we're very much experiencing that shortage of these type of homes, 3.5 million fewer single family homes across the country than the demand was for it, even before this recent increase. And so it's a great place to be. It's a great, especially the type of homes that we tell people to do. But I call it the not too hot, not too cold, not too high end, not too luxury, not too low end, C-class apartments, right in the middle where you have a better tenant, a better landlord experience is really a great place to be. And then when you couple that with what the federal government and the Fed has done with interest rates, where we've now moved down to all-time lows in interest rates that have an added incentive, an added benefit, where banks are a little bit more risk tolerance, that they prefer to have more skin in the game from investors. And when an investor can come up with an extra 5% and put 25% down instead of 20%, the bank has less risk, and they'll pass on that benefit in the form of even a lower interest rate to investors that are able to do that. And so we've been advocating and encouraging that whenever possible. And we've been seeing all kinds of investments in the 3.5, give or take, a quarter, of course, with good qualified borrowers. And when somebody can get a low in threes kind of investment loan, and that rate is subject to change anytime, but it's likely going to stay for a little bit. When they can have that kind of lower interest rate, of course, that's more money in their pocket instead of in the bank's pocket. And just that extra little bit of money, that extra $100 or $200 a month, makes a big difference to an investor's experience. It makes a big difference when those repairs do come up for somebody to feel a little bit more comfortable giving some of that money back and staying with the plan. And so that's what's so important with investments in general, is that you have a plan that you have drafted to begin with, and that you stick with that plan through all the ups and downs. And so we're seeing that combination of increased demand for the homes in the suburbs with ultra low interest rates and even extra benefits, putting hundreds of dollars extra in our clients' pockets, that really made this a very attractive time. In Kevin's invitation to this, there was the line, has there never been a better time to invest, at least not since the Great Recession. The Great Recession, the opportunity was there were markets where home prices got cut in half, and we were able to help clients get involved with that. So it's a great appreciation play. Right now, that's a great interest rate play and expected appreciation as well, to help investors be able to take advantage of that and make more money along the way and be in a position to accelerate a plan to replace their income. So really exciting times with that. Again, we'll get into more details about the investing and how it compares with other investments, your real estate investment, as we meet next month. But look forward to having more conversations and helping more of you out along the way.
Hey, Kevin, just so you know, you'll need to enable my video before I can turn it on, but perhaps it would be better if I don't have my video on.
I did send Steve a text saying your video's off, and he said it was so that Kevin could be the eye candy that kept you all entertained while he was waiting for his turn. So you should be
I have
any
often
minute now.
I have often been described as eye candy by no one except for me looking in the mirror, hoping. That's really what that is. Okay, Steve. So you're telling me you actually you think we want to see you? Is that what's going on here? All right, let me fix this. And okay, there we go. We got Steve, and then we can and just a couple comments. You know, I really appreciate what Mike shared. I was on a call with an individual who lives in Hawaii today, and he was kind of saying, hey, what do you think is going to happen with prices? You know, should we expect massive foreclosure? Are we going to see prices drop like they did in the Great Recession? And Steve and Mike, I mean, Steve, you've got some great stuff about what's happening in the markets. I'm going to kick it over to you here in a second, but I did want to just kind of mention what I mentioned to this guy, which was during the Great Recession, what we saw is a massive amount of people that went into foreclosure so that there was a really high supply of properties, which is what drove the prices down. And to your point, Mike, we are, and Steve, you'll talk a little bit about this too, I think, but that what we're seeing is really high demand and a very limited supply, unlike what we saw during the Great Recession. And so that being said, we're not anticipating that prices are going to go down. We don't have a crystal ball, and Steve will get a little bit more into that. Mike, any thoughts on that kind of dynamic compared to what we saw in the lead up to the Great Recession?
Yeah. Just like briefly mentioned, the 3.5 million shortage of demand right now for single-family homes across the nation. It is a very different world than it was 12 years ago after the Great Recession. And I like looking at the Great Recession because we can't tell you exactly what's going to happen in the future. We can't tell you what's happened in the past. It was a much uglier break in the real estate market, you know, caused in the overall economy and break in the real estate market then caused by real estate and loans at the time. And there's some pretty dramatic examples of home prices going down. But one thing that I love so much about what we do, we have so many filters that a home will go through before it's ever presented to one of our clients. One of those main filters is there's got to be a positive cash flow, and it's got to be a healthy positive cash flow. Normally 4 to 8%, but getting even better than that with the low interest rates now. And that's net of all expected expenses and fees. And so when you have a cash flow that is more like 6 to 10% in this environment, the worst case in any of the markets that we've been in, the worst case example we can show of rents going down this last after the Great Recession was that they dropped about 10% in Florida, in the Orlando, Florida area. There's more than 10% positive cash flow built into every home, and dramatically more now, so that even if home prices go down temporarily, and no, we are absolutely not seeing it, the demand is strong for this very type of market, but even if they do, if you lose 10% of your positive cash flow or 10% of your overall rent, is it still a good investment? And in my mind, absolutely. So a very different world. And even if we have a time period where it pulls back, the model that we have gives that positive cash flow so that you're still getting a competitive return with just the cash flow while you wait for appreciation. That's the thing with real estate. If market values are down now, just wait. They always go up. One of the answers I heard from a client that was looking to invest with our help, when I asked him why he was looking to do it, he was looking at a home up in Park City, a resort community here in Utah, where 20 years ago he walked by it and it was $400,000, and he thought that was crazy. I would never pay that much for it. 10 years later, you walked by it and it was on sale for $800,000. Today, it's worth $1.6 million. And he thought to himself, what's going to keep it from going up in the future? Certainly they'll have short-term changes in values, but long-term real estate, they're not making more of it, right? The land. And so real estate over time really goes up. So that's just a quick perspective. Even if it goes down, though, positive cash flows are there. Cash flows that are multiples higher than anything else that you could do in an income environment right now. A 10-year CD at the bank is paying 1% right now. A 10-year note from the Treasury is paying less than 1% right now. A corporate bond is paying less than 3% right now. And so, that to me makes it all the more exciting opportunity now to have that math work out where you don't have to just hope for appreciation. You can make a very competitive, a very good return on cash flow alone in these ultra low interest rate environments.
Yeah. And, you
Yeah.
know, I would just, you know, add to what you said, Mike, in terms of this being a very, very different situation from the Great Recession. Other than the results are very similar. Cash flow opportunities are excellent and appreciation is excellent. And it's all based on supply and demand. It's based on interest rates going low. It's based on, you know, in terms of demand, all of the different factors that you shared with everybody already. And one of the biggest differences, you know, from what we experienced years ago is that back then there was an oversupply of properties, and there, like you mentioned, there were major issues on the lending side of things, people getting loans that should have never had loans and defaulting on them and so on. And you know what's interesting is that even pre-COVID, we had a major supply and demand issue, right? Where we knew that supply was low. We haven't been hardly building homes for the last 10 years. It's just been in the last couple of years that home builders have really gotten back in the swing and started building again. And we knew that there was not enough labor in this country to build the homes fast enough to keep up with demand. And now, not post-COVID, we're in the middle of COVID, and I agree with you that this is the new normal, and people are transitioning from high density to low density. People are they got rid of the commute. They're just working from home, and so now they can live in the suburbs instead of having to live downtown. And so the demand has gone up even greater. And I recently read an article that Kevin's shared it on the resource page. He's going to share that link with everybody on this call with us today. Where you can read how the experts believe that we're in line for about a 10-year shortage of single-family rental properties. Not just homes in general, but specific to single-family rental properties. A 10-year supply and demand issue. And so that's why right now, you know, the three of us, our entire company, and you know, on behalf of all 18, you know, full-time employees here at Done For You Real Estate, you know, I got to say thank you for everybody being here and for giving us the opportunity to serve you. But we just have such a massive sense of urgency that we felt like we had to get this message out to you so that you could really see and understand in our world, in the microcosm that we can see with the more than 3,000 properties that are under management, we have a close-up picture of what's truly going on in the market today. And what you read in the media, they're finally kind of catching up to what we've been seeing and experiencing for the last 6 months. And so we just felt this great sense of urgency to share with everybody, you know, on the call tonight, that there truly has never been a better time to figure out how to purchase more investment property. More than half of our business right now already comes from our repeat customers coming back again and again because it just works. But I just feel like we have an obligation to share this message with our clients because you've been so good to us, and we just feel like we have to get you in the know that now is just, there just hasn't been a better time to be buying single family properties. So Kevin, if you wouldn't mind throwing the slides back up, I'll go ahead and run through my a little bit of information quickly. I know that we're trying to keep this call kind of short, so we've got just a couple minutes left, but I wanted to share with everybody, as a company, you know, when we started this company 13 years ago, we were doing real estate just here in Utah. Within 3 years, we saw the benefit and opportunity of going outside of the Utah market. And that's when we opened up Arizona and Nevada. And when we opened up those two states, we went through a very comprehensive research study of more than 30 criteria that we developed to analyze, you know, several markets across the country. And those are the two markets that we ended up, you know, deciding upon, and we went there. And as many of you know, those were fantastic markets. They did really great for you know, for most everybody who went there. And when we go to a market, we go there and we stay indefinitely. We're still in Nevada. We're still in Arizona. Although we haven't bought there for several years, we still have hundreds of homes there, but our clients have also sold hundreds of their properties in order to take those earnings, those gains, 1031 exchange them into our other markets, which we opened, which most of you know are Orlando, Florida, Memphis, Tennessee, and Indiana, Indianapolis, Indiana, and then also we've been in Charlotte, North Carolina as well. We're not as active investing there in the moment. We'll talk about that in just a minute. But these two markets have been phenomenal. You know, many of you have had the opportunity to sit down with Mike or someone on his team and get a property market review. We do this annually with our clients now. We started this up just over a year ago, actually, yeah, just a year and a half or so ago. And it's been a really cool experience to work with many of you and to help you see, you know, how your properties have really performed. And many of you have gone on to sell those properties and to move into additional markets. But I would just state this in the interest of time. If you still have property, especially in the Phoenix market, I don't know if there's been a better opportunity or better time to sell there and potentially roll those proceeds into additional properties. Kevin, if you can go to the next slide, I just want to share a real quick spreadsheet. And here's the reason why. Sometimes people feel like, well, I've got this property, it's cash flowing, you know, really well. Why would I ever want to sell it? Well, just to give you a really brief, you know, review of why you might want to consider, if you bought a property for $155,000, you know, 6 years ago, and now it's worth $220,000. If your down payment was $39,000 and you had net annual rent income of about $3,600, that's about, you know, a 9% return on your, you know, your $40,000 investment. So here's the issue is that if you've had an increase in equity of $60,000, $65,000 in that profit, your return on investment has actually gone down because you now have more resources tied up in that property. So if you take a look, the equity increase in 2020, it's $65,000. Add that on top to your down payment. You combine those two, that's $104,000. And your net annual rent income has also gone up, but not proportionally. So you do the math, and your return on investment has actually literally dropped by more than half. And so that's why it's important to consider the idea of taking the gains in that property and rolling them into an additional 2 properties where you can get that return on investment back up to that 8, 9, maybe 10% range. And if you're at that stage in life where you're not ready to start paying your properties off in full and just really relying on that cash flow, leverage is still a really good opportunity, and you ought to maybe just, you know, consider it. And that's one of the reasons why we kind of promote that in a significant way. And I would just also throw out there that invitation again, that if you have not had a property market review with Mike and any of his team, to give us a call and set that up and make sure that you take advantage of this service that we offer to all of our clients, where we do a property and market review on each of the properties that you own. And it's not just the property review, it's a market review as well, so that you can get a good idea of what the market is doing. So on the next slide, I'm actually going to talk a little bit about our current markets where we're very heavily purchasing properties. In these 3 markets last year, I think we purchased nearly 300 properties, or helped our clients purchase nearly 300 properties in these 3 different markets. And as you can see, the cash on cash returns are strong. The annualized return on investments are incredible. Appreciation is still strong. And I just want to touch on that really quickly, because when COVID first hit, we subscribed to a data source where we, you know, we're able to see per zip code in every city in the United States some pretty significant analysis on and projections for single family properties. And immediately, literally within weeks, that report was revised down significantly, where even these very experienced data analysis individuals and organizations began, dropping the projected appreciations in markets across the country. And it was interesting, over the following weeks, we just were kind of shaking our heads. We're like, okay, like our data is telling us one thing, but our boots on the ground, the real estate agents, the brokers, our property managers, they are all telling us something different. And on top of that, we were literally seeing the demand for properties going up. Instead of instead of the market slowing down, instead of pricing becoming sluggish, we saw the absolute opposite happen. We began seeing a greater number of multiple offer situations on almost every property that we're buying, and that is true to this day. And so, if anything, the upward pressure on the demand for properties is pushing and driving prices higher. So we really do feel fairly bullish that pricing will continue to be strong. We're not out there predicting that it's going to grow in double digits or anything like that, but we do feel like it's going to stay fairly steady to what it has been in prior years at the very least. One of the most exciting things, and Mike touched on it, is that cash flows have been increasing. I have not seen the types of cash flows that we're seeing today on the pro formas that we analyze on every deal that comes across my desk. We are seeing cash flows increase, and that is because interest rates are so low. And also because we have changed and promoted our strategy to put 25% down as opposed to 20%. But more than anything, that low interest rate is really driving cash flows up as renters renew and as new properties are leased out, after purchase. So our markets are strong. Our teams, we've been working with these same teams in these markets now for 5, 6, 7 years, and our relationships with them have never been stronger. We aren't just to some company that we've vetted. We literally have an ongoing relationship with our managers, with our real estate agents, with our brokers, with our rehabbers, to where we're in contact with them on a daily basis, and they truly are team members of Done for You Real Estate. And we appreciate so much everything that they do on our behalf, and especially on your behalf. I have to tell you one quick story. I mean, in Florida, for instance, our property manager down there, he has gone way above and beyond. He has gone out and he has sought out local ministries who are helping some of our renters who are having issues paying their rent due to COVID. And it has been phenomenal. He has been able to find rents in excess of $100,000 from these different ministries throughout the area where our clients have properties, to help out our renters who have had some issues. And so it's just been phenomenal, just above and beyond. And those types of things go on in each of our markets on a regular basis. I do want to touch on real quick, next slide, in Charlotte, North Carolina. We bought there for a couple of years, and our model there was to buy strictly new construction. And when the developments that we were working in and with our builder and the developer out there kind of ran out, we decided to kind of pull back just a little bit and see how those investments performed before really continuing to move forward. And for the most part, those properties have performed very, very well. We're very, very pleased with the performance. And I've been in contact with our teams out there, with our developer and builders and property managers and real estate agents. And in the very near future, we will be firing back up Charlotte, and we're excited to get back out there. And one of the reasons why it's so important for us to get back up to Charlotte is because of the supply and demand issues. What we are seeing and what we are foreseeing is the fact that we need to be able to deliver properties to you. And as much demand as there is in the 3 current markets where we are buying, we know that we need to get Charlotte fired back up again in order to meet that growing demand that we are seeing today. And that brings me to kind of what I feel like is a big announcement. On an ongoing basis, our VPs, Rodney Beecham and Nate Larson and Mike and his team, they constantly are coming to me and saying, hey, look, our clients are asking, when are we opening up the next market? And we're just very careful. I'm very careful about opening new markets, because when we go to a new market, it's not to just go there and then pull back. Our objective is to go there and to stay. Like I mentioned, in Nevada and in Arizona, We've been there for 10 years. We're not buying there, but we are there, and we have hundreds of properties there that are being rented. And I can almost guarantee that one day we will be back buying in those markets as the market cycles around. And so we don't go into a new market lightly. And we went through some fairly significant research again. And I just want to put a big, huge shout out there to Wes Brown. I think, Wes, you're on the call. Wes really stepped up to the plate for us. We've been, as a company, although we're 18 full-time people, we are stretched to the max. We run as hard as we can every day, and sometimes we don't have time for all of the different projects that need to get completed. And Wes stepped up and volunteered to do some research for us, which he did a fantastic job. He helped us research 14 different markets across the United States. And we scored each of those markets based on more than 30 different criteria. And then we weighted those criteria based on how important we felt like those criteria were. And at the end of the day, we came up with the number one market where we plan to go to next. So I'll just give us a real quick drum roll, and then Kevin, next slide. All right, we're going to Atlanta, Georgia. That's about as excited and about as hypey as I get. So I apologize to those of you who are a little bit disappointed in my fanfare. I didn't have any fireworks. I didn't have DFY in fireworks up in the air or anything like would have been great. But we are going to Atlanta, Georgia. Now, I want to be super, super clear that when we go to a new market, it's not because this market is way better than any market that we're currently in. It's that this market is at least as good as the markets that we are currently in. Right now, we're in the process of getting licensed with our real estate brokerage, property management, our insurance, and mortgages. And our plan is to open up Atlanta and to be there full swing, full force within the next 12 months. We hope that we can beat that goal, but within the next 12 months. So we don't want you sitting on the sidelines waiting for Atlanta, because at the end of the day, as great of a market as Georgia and the Atlanta area is, it's pretty darn similar to the rest of our markets. And I don't want to burst any bubbles or reduce the excitement about opening a new market, because it is a massive deal for us, for you guys. But at the end of the day, we chose this market because it's very similar in price point, in appreciation, in job growth, in favorability towards businesses and real estate investors, in favorability in terms of taxes and regulation, and all of the things that are important to us as real estate investors. So we are super excited to make this announcement. I'm super excited to spend some time out there and continue to develop some of the relationships that we will need out there in order to deliver the properties the way that we've been doing in our other markets. I'm excited about being in the middle of that process. I'm literally just waiting on hearing back on my submission application for our entity setup and our real estate licensing and so on. So super excited about this. I'll look forward to moving forward and sharing more with each of you. I'm excited about it as well because we will be involved in new construction out there very heavily, as well as existing properties. So super excited for this opportunity to move forward into Atlanta and to help each of you continue to take advantage of the Atlanta market and other markets. So I mentioned to you that we vetted 14 different markets, and there are 3 other markets that are very close second, third, and fourth on that list, that as we need to open up those markets, we are also in the process of beginning to build up what we need to build out, so that as we need to, we can open up those additional markets as well. So with that, I appreciate your time tonight. Thank you so much for being on this meeting. Thanks for sticking with us. I'm blown away at the number of you. I'm looking at the number of participants here tonight. It's just fantastic. And we look forward to continuing to serve you. Kevin, would you mind jumping back in and wrapping things up for us?
Yeah, absolutely. Thank you so much, Steve. Guys, it is really exciting. And I just want to reiterate what Steve said. Letting you know what's coming should not demean or take away from the markets that we're in right now. Listen, we are seeing awesome things happen in Indianapolis and in Memphis and in Orlando. With our national sponsorship, with a lot of the referrals and affiliate relationships, we knew that we have to react to supply and demand just like the market reacts to supply and demand. And as we continue to serve more and more people, we want to have as many opportunities as possible. But to reiterate what Steve said, this is not the other three markets are no good and Atlanta is where you want to be. It's quite simply, it's another piece of the puzzle. It's like, you know what, you've got Chips Ahoy and Oreos and then, you know, golden Oreos, right? And they're all delicious. And so I'm a big fan of golden Oreos. If you've seen my profile, you would know. But anyway, it really is just the fact that there is some really awesome opportunities that the market seems to be giving us, and that our demand seems to be calling for in terms of people wanting to continue to acquire real estate. So we are really excited about what's coming. And it takes a long time to get set up in a market. There's a lot of research that's done. There's a lot of groundwork that needs to be laid, but we're very excited. We wanted you guys to know, because you've been with us, you're faithful clients who are doing real estate successfully and continuing to transact. And we wanted you to know what the future looks like. But what we also want to reiterate is we've said it on the podcast. We've said it probably to you in person. You know, that old adage that when's the best time to plant a shade tree 20 years ago? The second best time is today. You do not want to wait for Atlanta to open and miss out on 10 or 15 or whatever $1,000 of equity growth and potential cash flow if you're kind of waiting for the next market to open to get your next piece of real estate. The reality is right now may be the best time that we've seen outside of the Great Recession, and there may not, who knows, we don't know what the future is going to hold. But when we're just kind of taking a look at everything, when we consider interest rates especially, and the demand and the lack of supply, we just feel like right now is such a great time to be buying real estate. Steve and I talk about this on the podcast. There's like this feverish desire we have to acquire as much as possible and help as many people as possible. I mean, imagine if you had the ability to acquire more back in 2010 or 11 than you did. How much better would things have looked today, even though things are looking really good? So we want to make sure that you're taking full advantage of the opportunities available right now with preparation as you look towards the future, as we continue to do additional real estate in Charlotte, as we continue to move down the road and open up Atlanta. We're so excited for what's coming and what's happening. And we just wanted to get you up to speed. We wanted you to know what's happening right now. We hope that you feel that desire, and we hope that you feel that kind of feverish feeling of, oh my gosh, I got to do as much as possible right now. We just do not want you guys to miss out on this and come back and talk 5 years from now and go, oh, if only if. So we wanted to make sure that we could let you know what's happening, let you know what's going on in the market, and say, hey, there's never a better time than now to at least have the discussion, have a property and market review if you've not had one, and take a look at options. The options may or may not be available to you right now, but let's at least take a look at it. So you could always reach us by calling 801-204-9061. That's the website or the phone number on the website. You could always go to dfy-realestate.com. I'm going to give you a link here in a minute, which is dfy-realestate.com /webinar. I'll put it on the screen here in a second. That's a resource page that we've built that has information about tonight. It has a registration link for the next webinar coming up on October 8th, where Mike will be favoring us with some unbelievable content, and we'll be talking a little bit about the referral program. So you can go to dfy-realestate.com /webinar. Tomorrow, we're going to post schedules for Nathan Larson, Rodney Beecham, and Mike Chamberlain, so that they're not up there now. I've got to get that stuff on the site tomorrow. But that way you could go right on there and schedule with your VP or with Mike if you want to do that. So we'll put that up there tomorrow. Today, there's all kinds of good stuff about the markets. The article that Steve mentioned, we're going to put a replay of this webinar on there, so you could go back and take a look at it if you want to. So anyway, lots of good stuff. And we also link to a couple episodes of the podcast where we're talking about some of this stuff. So thank you, everybody, for joining us. Thank you for being with us. Let's kick it over to Steve Earle, our CEO, for any final words.
No, thank you, Kevin, for hosting this event. Nicely done. Thank you, Mike. Great job, and thanks to each of you for being here tonight. Appreciate you, and look forward to the next opportunity that we have to meet. And the last question I have for you, Kevin, is when will people be able to register for the next webinar?
Yeah, if you go on to dfy-realestate.com/webinar, there is already a registration link posted at the top of the page. You can click the button and register for the October 8th webinar. Do not miss that. So registration is already open for that webinar. We are limited with the amount of attendees. So make sure you go and register so that you don't miss out on that webinar, because it's going to be really, really good stuff. And thank you for you guys. Greg and Tirza just said thank you so much for doing this, guys. That's why we want to do this. We want to be more consistent with these webinars. We'll do them every month. And please go and subscribe to the podcast. It's another way we can interact with you, where you can get current weekly information. But we hope that you will take advantage of the opportunities that are available to you right now. There are many of them. And aloha to our friends in Hawaii. And so thank you for joining us. Make sure you get in touch with us so that we can take advantage of the opportunities available. We do not want to miss out on these. And we love you guys. We appreciate you more than we can ever say. We are so thankful for you, and we are so thankful to be in this with you. We are a family doing really good things together, and we will continue to do just that. And we can't do it without you guys. And so thank you for joining us. Thanks for being on. Go visit dfy-realestate.com/webinar for the resource page. Register for the upcoming webinar on October 8th, and we will see you then, or you'll hear from us on Mondays on the Replace Your Income podcast. Either way, we'll talk to you soon. Thanks, everybody. We'll see ya.